Hey there, folks. Thought it would be a good time in the market to create a video covering just where I think we are at, given all of the market measures and tools that I use to kind of keep track of everything. So we're going to get started looking at SPY on the daily time frame. On April 8th on X, I posted a article saying that I think we could potentially be at a bottom, at least for now. So that was around 495 SPY on April 8th. And since then, we've, as of last Friday, we're up about 10%. So I'm going to go through a couple reasons why I think, or why I thought that that was a potential bottom. So nothing really to do with any particular political statements by anybody, but just purely technical. So on the 8th, we had a sustained down move quite fast and seeing a lot of increasing volume. So this is volume here, and these are deviation break signals. So every time we come lower, the volume is increasing. So that's pretty much what this shows. And yes, all of these sectors are basically breaking down here, showing extreme selling. And at the time, we had very low percentages of market breadth for each sector, showing any kind of strength for the moving average that this is set to, which is the 200. So if we look back at the 5, we get a little bit of a different picture here. So you can see we drop down for the 5 on the 8th, right? Then the next day we come up, we have this huge rip, and we can see just a sea of green here. All right, so that's a little bit faster time frame. We go to the 20, okay, still quite red. The 50, right? Red, red, red. So this is important. 200, seeing a little bit of green, but mostly red. All right, so what does this mean? So this means that, yes, that was a bottom for now, and we've made a steady bounce back to the, I guess, what is probably considered a pretty good mean reversion target, which is the 200 SMA. That's what we got here. So we did have a retest off of value area high here from the year's volume profile back to and a little bit under here on the 21st, the point of control, that 522 price. We are starting to see some volume momentum cross up into positive territory, which is why my regime outlook here for the year is saying long bias. However, we're just now starting to come back up into the mean price here, the 200 and the 50 here. So everybody was talking about the death cross, so I don't know how many people really caught any of this move here. I mean, even from here to here is about a 7% move. Pretty darn good. So where are we now? So we looked at some of the faster moving averages on the breadth. Things are looking good in green, and definitely across the other markets. So we have the S&P 100, we have the NASDAQ 100, the Dow, and the Russell. They all printed a potential bottom signal right on April 8th, where I posted my article. Okay, and we're just now near the high of value area, and all of the breadth on the short time frame is pretty maxed out. So I'm looking for a little bit of a pullback and perhaps some range. We have a low volume area here, and in my opinion, I think what we'll see is some time spent here filling this area and dealing with the moving averages. So this is a 50 and this is a 5. So yes, we're above the 5. We're going to cram right into the 50 here pretty soon. We know that the 200 and the 50 are pretty close by. So it's a big convergence spot. We have very little volume on the year in this area, which you can tell. Here's 2025. Here's where we started. So we've got just this little blip here. We fell right through here hard on all of the tariff comments. So not a lot of volume here. So making a bounce and coming back and visiting these gaps makes total sense from a technical standpoint. And I think we're going to continue. So we've got a block of volume here starting around 554 up to maybe 564, so a good $10 range. And it's hard to say what's really going to happen, right? They could gap this up overnight, news, whatever, and we're, at some point I think we're going to deal with this area. When? It's hard to say. Looking at volume profile on the weekly time frame, so each profile here is a week. A couple things to note is just how much value we built down here and what the internals were showing us. So this is set to the New York Stock Exchange here, and we're looking at the ad, that's the price, and the volume, which is the VOLD, looking at the ratios. So every time we made a higher low, your ratios got improved by some multiple metric here. So negative 27 to 1, negative 26 to 1 on that real bad bottom sell there. And by the time we get to the 8th, we're at negative 4 to 1 and negative 15 to 1. And these rises are quite aggressive for the breadth of the market. So we have good value established here. We have a good block of volume. 522 is about as low as I would think we would go if we come back to do a retest, which 522 is going to take us back to near the yearly POC here. So some good alignment there between the weekly and the yearly. I definitely think it's possible. We have a lot of value area to contend with back in that 575 range. So I don't know that we're going to get there, but that 555 value, you can see we've been planting some volume there and here, and then we've got this gap. So it's no surprise to me that we basically stopped just below the weekly high volume area rather over here, which is at 557. So 557 is going to bring us right inside of this volume area here from the yearly time frame. So we've got this gap in volume right at the top of the value area here for the year. Looking at Friday's action, it's pretty telling that we started to have some struggle. I did a lot of X posting. It's going to hide my notes for that. So looking into where we opened, notice how we have many days in the end of this week. So we've got this gap here, but then from Wednesday to Thursday, no gap. From Thursday to Friday, also no gap. So it's a good thing to pay attention to is the market, when it starts to hesitate on what's going to happen, you'll see less gaps. And so we've got 3 consecutive days here with no gaps in between them. And Friday, we're basically coming back into these big weekly gap zones. So this is for SPY, this is pretty decent size, $5, almost $6 for a gap. And look at how we contended with this gap zone here of $10. So this gap zone came from Monday back in mid-April. Okay, and we just gapped it up. And we did the same exact thing on Wednesday this past week. So this is why I say I think we're still going to maybe come back here. I thought we were going to do it this week, but whether it be data or other reasons, we didn't. So we have tech earnings. We've got some other things happening. It's hard to say exactly when we'll see this area. Maybe somebody has an idea, but I don't. Friday, we spent a lot of time within the previous TWAP range. Pretty much all morning we kept flirting with that, and we get these slow kind of melt up kind of moves. I called out that I'm looking for 551. We just barely missed it before I think we had some tariff comments online. Get this drop, save on TWAP, and we chop our way basically right back up here. So a lot of lack of confidence kind of movement here. I think the gamma environment is one that's a lot more positive now, and things will tend to slow down in that kind of an environment. Also, did not see top stocks pushing as hard um, this whole day. So had also pretty calm breadth on Friday. So anything between plus 500 and minus 500 is going to be considered chop. All right, we spent most of the day in that exact area. We calmly approached the 200, which is what that is, and we didn't really have any kind of reaction other than a strong rejection right when the tariff comment was made by Besant, I think. I don't know if I'm saying his name correctly. So it's very funny timing that right when New York market is hitting a major pivot on breadth is right when the news came out and dumped it back in the chop range low. Very funny. Multiple rejections, flirting around with that until we kind of finally break over at the end of the day. Vold, very interesting setup as well. It's, as far as I'm concerned, does not have as much of a defined chop range like the price advancement does, but very much the exact same kind of movement with a slight pop over the pivot and chopping right back in here. So nothing really exciting. But I think that's going to take us into somewhat of a weak start to next week. It'll kind of depend on what the futures market looks like, and of course, if anything else comes out on the news. I don't know. It definitely has an effect. But looking at VIX as well, we're starting to see a crush on volatility. We started, let's see, up here around 30, and we worked off almost 6 points. Okay, our high recently was 36 back here, kind of mid-April. I don't know. Let's see. Okay, yeah, we were higher than that, 50. So we've done a lot of work on VIX. So fear and greed, I don't know. I still would say there's a lot of fear in the market, but also I do think that the market makers have been squashing a lot of the volatility. But with this relief rally, I kind of hate calling it that, but I think that's probably where maybe some of that reduction in VIX has come from. Looking at the forward contracts of VIX, I haven't done that yet, but I would be very surprised to see much build up there yet. But stay tuned, I guess. And so I'm looking for perhaps some chop, maybe another revisit of this area down here, and continually building up more volume. And we'll have to kind of go through earnings and go through, I'm sure, more comments by various people, this administration, on different trade deals and whatnot. So I don't expect the volatility to really calm down overall with regards to that particular topic, but so far it seems like things are calming down on the interim. Okay, so overall that's what I have for now. I have some key levels given to you here, and on the Qs we kind of have a similar situation, right? So if you look at the SPY, we've got continually, at least here within the last couple weeks, continually higher value areas, and just kind of trudging along here. And same exact thing here on the Qs. So value area, we got a nice big chunk here, and we established some good value here, slightly above this area, and then we crammed right up against prior March value area low. So looking at that in conjunction with, let's flip this to NASDAQ breadth here. Okay, we got similar situation. Personally, I have been a fan of watching growth to see kind of what we're going to do, because let's face it, the growth is the thing that took the biggest hit. Like your Microsoft, your Google, your Nvidia. I mean, they were decimated on this down move from their highs anyways, and that's going to be the thing that needs to recover, is that top market liquidity, in order for the rest of the market to feel comfortable with buying this market again, in my opinion. So watching the Qs, watching NASDAQ futures, and checking how they're responding to the value areas here on volume profile will definitely assist you, and also figuring out who's leading, if SPY leading the S&P, or is the NASDAQ leading. And this last week, I found a lot better market sentiment analysis by looking at the growth, the tech market, because without the tech market pumping some of the levels I had, didn't see the reactions that I had expected. So, but it definitely has pivoted around where ES is leading and NASDAQ is lagging, and then other times NASDAQ is leading and ES is lagging. So definitely the higher up we go on this particular retracement, the more I expect things to kind of crunch and slow down and volatility decrease, and we'll start seeing a lot less spice, right? So we got, a $52 move on this day. Some big, just massive days here. Some of these candles are just, unbelievable. That's not sustainable in my opinion, and I don't think we're going to go back to the slow days where we were only seeing $1-2 changes, but definitely I think we're going to start seeing some contraction, even more than what we had this last week. So if you've been enjoying high volatile environment for scalping, you might need to curb your enthusiasm until we see a little bit more clarity with what the market's going to do with this pivot area here. So none of the breadth is very strong bullish on a longer time frame. I have to go down quite far. Let's see, 100. Yeah, see, we're looking at where growth is only 30% of the holdings are above the 100. Only 36 above the 50. 79% above the 20. That's just this last month. Okay, 85%. So in my opinion, something that I have been doing is looking for opportunities for broken wing butterflies, capturing down moves, call credit spreads, another thing to look at, or if depending on your risk tolerance, you can look at short side leverage ETFs. Some of those 2x and 3x ETFs that are inverse ETFs might be an option. And just watch your breadth. When the long-term breadth is red and the short-term breadth is piping hot, that's could be a good area to look for counter trades, or really I would say reversal continuation. So it's not really counter because the trend so far is still bearish as far as I'm concerned, and so we want to sell the rips and buy the dips effectively. And so definitely, like, if you were in somewhere around here, if you read my article on X and you bought somewhere around here, I definitely think it would be in your best interest, especially if you're just trading and not investing, to ensure that you trim, take some profits, and cover your risk accordingly, because I think this next week we're going to either see some chop, which is going to hurt options buyers, especially just single leg, and potentially more volatility contraction, which also will hurt single leg options buyers. And chop also hurts anybody that's trading directional, regardless of what kind of product they're using. So that's pretty much what I have for you. I will say one of the last video I made was announcing our Discord community. I think we're at 30 members so far, and we've had one event covering all of the various tools, the trading strategies that I use, our indicators, some of the data that we look at. We've had a lot of great conversations on the trading floor. We've got our Squawk Box that's helped us gauge looking for news events that might hit the market. A lot of good stuff. We're getting ready to have another event this upcoming Tuesday that will be for premium and trial members. So if you want to just join just to become a trial member, just to come to the event, please do so. I don't really care. I'm offering it though for trial members, and we're going to cover using market internals to day trade. So the first video I ever made was covering that, but I've since expanded kind of how I use them, and 2.0 market internal usage. So feel free to join the community, even if you don't sign up for a trial. There's free resources. There's a lot of chatter going on in the non-premium channels as well. I welcome everybody. Again, like I said in my community launch video, just please do be mature. We're not doing a lot of degenerate gambling and meme garbage. So just really trying to trade and be respectful with the markets and our money. So feel free to join. We'd love to have you. And as always, thanks for watching and happy trading.